Hi folks, this is Lee with the Market Sense for the week of March 5th, 2019. The charts in this presentation are provided to us by Gettess and their Trade Navigator software. And looking at a weekly bond market chart here, you can see they've tried to break out the lows of this congestion area here, and yeah, almost but not quite, son. They've turned back up without, we've got support down here at 142.26, and I think you have to consider that the breakdown point. Even if they take out this low, they need to take that out before they're really breaking down. And instead, they've turned back up. The resistance that should hold them to drive them back down is about 144.12. They do not appear to be holding that. They're creeping through it a little bit, and it looks like 145.10 or so is the next target. And I'm not going to be at all surprised if we see them up here at 146.12 and testing the highs again, because that's kind of how sideways markets work. They try to take out the highs, they can't, so they come down and try to take out the lows, and if they can't, they go back and try to take out the highs again. I am afraid of the market breaking down. Afraid is probably not a good word. I can see a reason why they would break down. This was a pretty substantial move up, and it wouldn't surprise me to see a little more weakness here. But there's really nothing to suggest that it's happening, and that's really what we're dealing with right now. We still appear to be sideways, and I think we have to just continue to trade them as such. Now, stocks finally have a little breakdown here. Now, this actually all happened in one day. It was just on Monday. But we have resistance this week at it's 28.22, which happens to coincide with the exact high back here in this sideways pattern. They did not get there. They didn't quite get over 28.20, in fact, before turning down, and they got down to the middle moving average, the green line. As you can see, they haven't been there in about 8 weeks. They finally did touch that green line, and in fact went a fair amount below it, but then recovered it. Now the green line is 27.79 this week. I'm not sure but what they can go back below it again, because they went so far below that it almost didn't appear to be holding to me at the time anyway. If they do, then of course they could go below 27.50 and down to the lower moving average here. And as you know, I've been wanting to see them break down big for several weeks now, although at this point they've rallied so long that a break back down here wouldn't really be a retest. It would be kind of like another leg down, and we'd have to judge it on its own merit, I think. But they certainly could break down. This is sort of an obscene looking rally here, but they don't look like they are. That's the problem. They got below this and couldn't stay there, and again, they can go back down there, but they don't look like they are yet. And with all this time not trading it, I think you can't be surprised if they just continue up for a little while here. I have to say, this is not analytical at all, really, but you've got, nuclear program ginning up again in North Korea. You've got China needing to stimulate their economy because it's suffering. You've got problems with Brexit over in Great Britain, and we haven't talked about the U.S. economy or political situation yet. I can't recall a time where there was so many really varied things impacting markets. Very difficult to know what might be the most important thing on any given day. So unfortunately, that's all we've got for you today. I hope you can find something profitably